is Friday, BS.H. That's buy, sell, or hold. You guys sent in quite a list of stocks we're going to touch on, and some buys, some sells, some holds. Well, maybe not so much on the hold side, but a mixed bag. Starting off with entertainment. There was a lot of questions about a lot of stocks in the entertainment area, and I certainly get it. I'm going to get to why I get it. But I'm going to start with AMC Entertainment Holdings, symbol AMC. A lot of you guys wanted to talk about AMC stock. Is it a buy? Is it a sell? Or is it a hold? It's a buy. No, it's a sell. It's a buy. It's also a sell. It's definitely not a hold. It's a buy and a sell because you should be buying this low and selling it high. It's trading. This trading 101. This is a Reddit Fed stock. Okay. The long-term secular trend for AMC is down decidedly. Go look at the 3-year, 5-year, 10-year chart. It's not going up. It's only going up now because it's got something like a 20% short position. The Reddit crowd is chasing it. They're trying to squeeze the shorts. Why? Because it's in long-term secular decline, and there's been a lot of shorting of AMC. Theaters are mostly still closed. So yes, if we get a reopening, people are going to want to go out to theaters. I know I want to go. I love the movies. But are you going to buy the stock? No. Are you going to buy it because it popped and you think something's going to dramatically happen to change the whole industry? No. No, it's not a hold. Buy it low, sell it high. Trade it. That's the only thing you should be doing with AMC. You know what? If you can buy it around $6 to $10, take a little bit of risk, and then try and sell it up around 15 or more. Just kind of do that all day. I wouldn't short it at 15, 16, 20, because, you know, the Reddit crowd could take it still higher, but I certainly would buy it on those really heavy dips, like down to 6 to 10, sell it at 15, trade it all day long. But don't hold it. It's certainly not a long-term hold. That's all. If you don't want to play in there, get out. Don't bother with it. Move on. Next up, Viacom CBS. Now, we talked about this last Friday, symbol VIAC. And I said, yes, this is a buy. It's still a buy. It's going to continue to be a buy for all the right reasons. Yeah, on the short side, about 9.5% of the floating shares have been shorted. So that means it could get a little pop now and then. I like that. It's a nice little backdrop to have, but that's not the reason I say it's a buy. It's a buy because for a lot of reasons, it's got huge revenue. It makes a lot of money. It's got a 2.26% dividend yield and like a 22% payout ratio. That's fabulous. Got plenty of money. Yes, it's got a ton of debt. So what? They're able to pay the debt and still pay dividends. Yeah, you want to buy it. And with what's going on in entertainment, yeah, I want to own this. I love their properties. Now, next up, this was a very interesting and marvelous question. I thank whoever you are. I think there was a few of you that asked me about this. You guys, great questions. VIACP, that's the symbol. That's Viacom CBS 5.75% convertible preferred. Okay, so it's trading around 70 and 72 thereabouts. So this is based on Viacom Company. So Viacom Company issued this. They issued new stock in a couple of months ago, and that was the beginning of the stock getting hit really hard after it had a nice quick rise. At the same time they issued new stock, they also issued this 5.75% convertible preferred. So a lot of you asked me, should you buy VIACP? It's a symbol. So came out at $100. You could have bought it for $100, but it's trading at like 72 now. So the questions were like, wait a second, this has got a 5.75% yield, annual yield, and it's trading way below par. Shouldn't I be buying this right now and just making a huge profit? No. This is an absolute sell. And the reason is, if you don't know much about convertible preferreds, this is not a bond, right? This is a convertible preferred, all right? So you get a preferred dividend yield and you can eventually convert it into equity. Here's the thing. Viacom has a couple different classes of equity. VIAC, which I just talked about, that's the class B. That's the non-voting shares. That's the shares I think we should be buying. The class A shares, symbol VIACA, trade a little bit higher because they have voting rights, okay? I don't care about voting rights personally. I just care about making money on the stock. I'm not voting with management or against management. You know what? I want to just buy VIAC. Now, the convertible preferred, the interesting thing about this is, and it kind of makes intuitive sense. Well, wait a second. If this was trading for 100 and you get 5.75% annual dividend coupon on that, now it's trading at 72. my yield must be exponentially higher because I'm not paying par. I'm paying 72 versus 100. No, it doesn't work that way. This isn't a bond. Because when this expires, and it does, because it has a mandatory redemption date of April 1st, 2024, you have to redeem it. You don't get par, you don't get 100, you get shares of the B class. So you don't get the $100. You're not buying something at a discount from $100 to $72, and then you're going to make that nice yield, and then you're going to get $100 when the thing matures. That doesn't work that way. This is convertible preferred. So yes, you can convert anytime you want into the shares of Viacom Class B. However, there's a conversion rate, and that has something to do with it. The conversion rate it's kind of tight, but basically for every share you own of the VIACP, the convertible preferred, you might be able to get between 1.0013 shares of Viacom or 1.176. Here's the thing. I won't do all the math for you live. It doesn't matter. You're converting something. And where are those shares trading now? Oh, they're trading about $42.50. So you're paying $72 to get 5.75% coupon, convert into something that's only worth $42? Never. No way. Sell it if you want. That's not going to work. The math doesn't work. It doesn't matter if you collect a dividend till the expiration, which is basically the maturity, which is basically when you have to redeem for shares. Doesn't matter. I've done the math. You still lose money. Don't touch this one. Absolute waste. So for those of you who think you're getting a good deal, you're not. If you own it, sell it. You want to buy the shares, buy VIAC. Next up, Amazon. Wow. Why are we talking about Amazon, AMZN? Because it's a buy. It's been a buy. It's going to continue to buy. It's even more of a buy now because they just bought MGM Holdings. MGM Holdings, tremendous library, tremendous assets, I believe, under there that have been underutilized. So I think with Amazon behind them and Amazon Prime, I think they're going to turn this into just something amazing. You know, talking about competing with Netflix, not that they already don't, because they do, but it's going to make them stronger. Why do I like Amazon? Why is it a buy? I don't care about the prospects of the FTC investigation or the prospects of the Washington, D.C. AG going after Amazon. That stuff is going to continue to happen. If it happens, it happens. I don't worry about stuff until it happens. So if it does happen, here's what I think. The sum of the parts are worth more than the whole. If for any crazy reason Amazon gets broken up in any which way, I don't care. Some of the parts are worth more than the whole. Buy Amazon. It's absolutely a buy, period. Next up, ET, Energy Transfer. I love this. It's a buy. Natural gas pipelines, thousands of miles of pipelines. So listen, this company's got a ton of debt, and a lot of people are deathly afraid because it's got a massive amount of debt. How about like, oh my gosh, I didn't even write it down. It's like $48.6 billion in debt. I mean, crazy numbers. But company does $44 billion in revenue. It makes money. Net profit, about $3.5 billion. So yeah, it's got a ton of debt, but it's making money. Dividend yield, 6.06%. on a payout of 70%. So 70% payout ratio, you get 6% dividend yield. Is the dividend safe? It is for now, because they just cut it in half. So I think you can get, I like buying this here, and at between 8 and 10. If you want to pay up right now, it's kind of high, but if you get a chance to buy between 8 and 10, especially preferably around 8 if it comes back down, and it may, you want to buy this. You got a nice dividend yield, and I think it's got upside potential. Is it risk-free? No, of course not, but I do like it because you guys know that I like midstream MLPs. I like energy in here. I think energy is going higher, so I think they're going to have an easier time paying off their debt. And I like ET, Energy Transfer. It's a buy. Last but not least, Interdigital Incorporated, symbol IDCC. Now, this is wireless communications technology stuff. They have all kinds of products that fit into that, whether it's cellular technology or the Internet of all things technology having to do with smartphones, et cetera, et cetera. So I like the space they're in. A lot of cool products. The thing I like most about this kind of little company, it's about $2.18 billion market cap, is they have 28,000 patents. So it's a buy. I like IDCC. It is a buy. A little bit more I like that profit margin, near on 14%. It's got small revenue, small-ish, $365 million, but it makes about $50 million off of that. I like that. Oh, and it pays a dividend, 1.18%. Not a lot, but pretty good on a less than 65% payout ratio. That means it's got money. It's been making money consistently, enough to consistently pay a dividend. That's a strong company. I like it. It's a buy. IDCC, it's a buy. So, and one other thing. About 7% of the floating shares have been shorted. So once again, this is one of those stocks that's got, a little bit of a short position against it. And that always could create a little pop. So another reason I like it, but I won't buy it for the pop. I buy it because long-term, I think IDCC is a buy. That's it. Hey, everybody, have a nice, long, and wonderful Memorial Day weekend. Cheers, everyone.